Hmm.
and I ain't have no backup.
Okay. 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 I got you. That makes sense. That makes sense. Um, so yeah, so probably next Sunday we could start we could start having just picking a random day, or it don't have to be a random day. It could be a day that somebody traded and they had questions about, they had a bad trading day, or they want to know, questions about why the trade didn't go my way. And if those issues occur, if those issues arise, and you have a day like that, please journal the day that you took the trade, journal the time frame that you was on, the time that you took the trade, the reason why you took the trade, so we could be transparent and get better, instead of, because that way we could go over it in live action. And that way, when you see that happen again, you know what to do. Or you're prepared to either wait or be patient for a better setup, or, do the opposite of what you did that got you in trouble. So I think that's gonna be very, very helpful and useful. Not just to y'all, but to me too, because I get to get more practice. I get to, bounce ideas off of y'all. I get to kind of like sharpen my tool set. And when y'all ask me questions, it kind of makes me, dig a little deeper. So when we're doing it live, it'll be easier for everybody to see it and be like, oh, okay. So whatever setup, like I said, whatever setup you have, whatever you trade gaps, levels, bound, whatever, we could just go through it and trade it, and also trade start. I'm gonna start showing y'all like proper like risk management too when you're taking your trade, and where you put like where's a good spot to put your stop loss. And then, we're gonna go through all that. And then, I think we should do that for maybe like 4 or 5, maybe the rest of the zones that we do. But I think that's gonna make a lot of us, it's gonna make all of us better traders, to be honest with you. So let's get to the chart. Let's get to the chart. All right. Y'all see the screen? I'm going straight to the weekly, man. We're gonna start from the top down. I'm not gonna go to the monthly. I'm just gonna start at the weekly. So this is what we got. We still in the range. We haven't displaced outside of the range. So this is still this is a daily range. Um, the weekly range is a little lower right here. The weekly range. We'll be trading in. But yeah. So here's what we got. I remember last week I said we hadn't closed above this weekly gap yet. That gave me error of caution. I thought we was gonna have some more continuation to the downside. The market hit say Uno reverse. I and it's highly likely due to Trump winning the election. So, you know, that's why you see Bitcoin running, and they it's like a knee-jerk reaction to Donald Trump winning. But we already was talking about this on the Zoom, how we felt like the market was gonna be bullish. Anyway, this I'm not gonna lie to y'all though. This candle from 2 weeks ago, it threw me off. This red candle. It kind of threw me off because I was expecting some type of continuation to the downside. But this breaker kept supporting us right here. So I thought eventually we was gonna break through that and trade into this gap that's in discount and then trampoline higher. But it didn't happen that way. So this is what we got. So now let me close this out. Hey man, I got a new mouse too. Job turkeys. All right. So this is the monthly gap. I mean the weekly gap that I was talking about that we couldn't close above. We finally closed above it last week, and it's a strong close above. Now we wait and see. So as I was saying earlier, um, well, when I get to the daily, I'll talk about that. So now we wait and see what happens. So now I'll be looking from a weekly perspective for the market to retrace down to the top of this gap, to use it as an inversion to trade to the upside. If we're gonna continue to displace to the upside, and We have an order block right here. Now, so you never want you don't want to buy in premium, right? Because we still in premium. But the market, in my opinion, I think the market wants to continue to expand to the upside. So if we do continue to expand to the upside, the market is now creating a new range. So in that, this order block would not be in premium anymore. It's going to be in a new discount because now we're going to have a new range going to the upside. And I'll explain that when we get to the daily. But this is what we got on the weekly. This is a very bullish candle. We closed at the high of this candle, a little bit higher, but you could kind of say like we closed at it, above it really, but still at it. So the market could kind of retrace a little bit and then continue higher, or it could consolidate and then go with another move to the upside, the next leg to the upside. But I'm more neutral bullish than bearish. All right. So let's go down to the daily right quick. So on the daily, okay. This blue box right here is that weekly gap I just drew. So I'm gonna just erase that because we're talking about the daily. All right, so this is what we got on the daily. The last few days of price action has given us this. All right. You got inefficiency here. Got inefficiency here. Right? Volume imbalances. Y'all see that? Got one down here too. I'm gonna reiterate this though. Like a volume imbalance is not like a reason to trade per se. Like it's not like a PDRA. It's just like volume imbalances give you indication of where price could be drawn to next. Because we all know like the market love to be balanced. So when the market leaves volume imbalances like this and like um these gaps that offer fair value, then then you could kind of get it like a better read on where the market is trying to go. Right. So now what I was saying on the weekly, I was saying if we continue to the upside and displace higher, let me make this. So if we displace higher, the market is probably now setting a new range to the upside. And these gaps that are in premium of this range that we're currently in now become discount gaps in the new range. So that's typically how the market plays it. When it's ready to displace high and start setting new higher highs, it's going to start like, I think the first indication was we had a lot of consolidation inside of premium. I remember we talked about that the last few weeks while we consolidating inside of premium. We said because we're gonna have a big move, and it's probably what's gonna be to the upside because you had election and all that stuff. So when like Donald Trump won, because that was consensus favor, whatever. I shouldn't say that on YouTube, but when he won, that was the like the catapult to start pushing the market higher. So we closed, we closed above this gap. We took out this high. We closed at it really. So now we have these two gaps here. So I'll be looking for the market to either continue to the upside or trade back into the range if it's not ready. Now, if it trades back into the range, then we already know we got a range. So
Oh, Mike.
we got yes, sir.
Um, I know on my chart, I have you have the retracement on it right now.
The field.
Yeah. I did the extension,
Mm-hmm.
so it ends up being from down there where we at right now. End up being the 100% mark that we couldn't break
What?
on extension.
So this is the 100% right here, you saying?
The top. So how you got that run and then you got like a dead stop. Uh, I just want the people to start, even if you don't, when we reaching like all time highs, I think it's a good thing to use because even if it breaks that high, um, they tend to stop in those areas on those extensions. 9 times out of 10, I've had it use any of those levels as like either support or resistance when you're getting a run and you don't know what a market going at.
Oh, so you talking about like the field extensions?
Yeah,
Okay.
if you put from that bottom wick all the way at the bottom, the red one, the swing low down here.
Mm-hmm. Let me take some of this stuff off the chart. Extension.
Yeah, that bottom wick. Yeah, go to the top of that run until your next swing low. Yeah, and then yeah,
Yeah, that's it.
uh-huh.
Yeah, that's it. Same thing with the range though. It's okay. Yeah. So, and then you got your swing high.
And just if you look at, I mean, you see those little key levels. You
Mm-hmm.
see they
The
kind of
key.
reacting to that.
Yeah, point inside of that.
So I like it. I always use it. Even when we look at spy and stuff, we'll see how it played out.
Okay.
So y'all put that in your I don't know where it's going box.
So now, I'm about to just put the range back on that right quick. Let me see something. Yep. Highest wick, lowest body. There you go. Same thing. So now, bro, this is what we got. So we got this swing high that we closed or we swept on Friday or Thursday, one of those days. I think it was Thursday. And then if you look closely, yeah, where the market stopped, where this wick stopped at Friday. Let me draw a line across so you can see it. Move that gap. See this candle body right here? This red candle that started to sell off. We closed above it, came back and tested it on Friday. But we still couldn't close or get above the 100% of the range forcefully. So we could see a retracement back into the range and we could consolidate, honestly, going to the week. I think is the market closed tomorrow for
It's better. Yeah, it's probably not totally possible.
okay, okay. But going into the week, I'm still very, very either neutral, meaning consolidation, or we're gonna continue to the upside. Now, I always say this when we trade at or near all-time highs, the market is going to trade kind of crazy because now the market is, is creating new price to the upside because we don't have no price to reference to the left. So when the market is creating new price to the upside, you're probably going to see quicker, stronger moves in either direction because it's no all it. So let me just explain to y'all like this. See this up here? it's a abyss of liquidity. So wherever the market wants to spool to, whatever the market wants to set as its new all-time high, and there's a way you could calculate that. I'm thinking with the fibs, I think like Winston was teaching us or showing us a little while ago. But this is a abyss of liquidity. So you don't know when the market is going to stop and reverse or pull back. So when we are trading at these levels in the market, all-time highs, it's safe to err with caution because you don't have data to look back to. Because once we start trading above it, you don't have nothing to look to the left. So history tells me that you wait until a new range is created, or we trade back into an old range to find trades in whatever bias that you feel like the market is going to. But like you don't want to try to predict price unless the market starts giving you more information going into it setting higher highs. But when we go down to the lower time frames, we probably start seeing the writings on the wall of what we could be doing. So that was the daily. That was the daily chart. It's the 4-hour chart. So on the 4-hour chart, these are the breadcrumbs, right? So we swept the all-time high. Let me just squeeze the chart so y'all can see it. But it was the all-time high right here. We swept it, and you notice how we didn't displace higher or continue higher. We just consolidated right there. All right. So what we could be doing is consolidating, retrace a little bit, then for the next leg to the upside. So now, if that happens, now you got data to trade to the upside. So, for instance, let's just say, for teaching purposes, let's just say we do something like this, trade into this gap, right? Going into the week. Let's say we trade into this gap, and then and then get up out of there, right? So from a FLARA perspective, you're looking at it as, okay, let's just say we traded into 50% of this gap, and the market responded off that. So when that happens, and let's just say you are looking for a trade within this gap, of course you're gonna go down to a smaller time frame to find that trade. So if the market trades into this gap next week and it uses it as like a form of support or trading into the 50% of the gap, I'm gonna just put a line. I'm just gonna estimate that it's about right here without doing the fibs. So 50% of the gap, boom, on a 4-hour, trades into it and gets out of that. So when this happens, you're gonna go down to your lower time frame, i.e. 5-minute, 3-minute, whatever, and see how prices respond into this gap. So if the market looks like it's trying to reverse on a smaller time frame, like if it trades to the 50% of the gap and reverses and it creates a 5-minute gap or a 3-minute gap, whatever time frame you're on to the upside, then the market is trying to reverse and continue to the upside. And that's how you find your trades on the smaller time frame using a high time frame bias. Like, because you don't want to take a 4-hour entry on a 4-hour trade, because you could enter this trade and it could wick down a little bit and close up and then continue higher, but that wick would take you out of your trade. So it's easier to manage your trade on a smaller time frame as opposed to just trading a 4-hour. So if you see a 4-hour setup, you're just taking your trade on the 4-hour instead of going down the timeline 1 hour, 4-hour. I mean 1 hour, 5-minute, 15-minute, whatever streak that you use to trade. But that's what you will be looking for. Like you will be looking for a setup like that. If you believe that the market is going to trade back into this gap and use it as a form of support, you're looking for a 5-minute reaction or a 3-minute reaction or a 15-minute reaction, whatever is the time frame that you use to enter your trades, or 1 minute, whatever. You're looking for it around this. You want to see how those candles start printing. Is it showing you signs of reversal? If it is, then you enter your trade. But if you enter in this trade from a 4 hour premise, you looking to get out from a from a 4 hour high or a 4 hour order block or a 4 hour mitigation block or order block, whatever, that's going to be your price target. So even this trade, this hypothetical trade that we're talking about right now. So if I make the candles a little bit bigger right here, that's a lot of room. So even let's just say the entry is perfect. Let's just say you enter the trade here at 21.040.75 on the 5 minute, and you say, well, I'm getting out at, let's just say let's hypothetically say this is a 4 hour change in the state of delivery right here at 21.142. So from here to here, that's like 100 points. So I think that would be more than, sufficient for you in your trade. You see what I'm saying? Instead of trying to catch like the big like big monstrous moves into the upside when the market moving 300 points or 400 points, instead of trying to catch that whole move, get in your pocket, take what you could get and get out of there. You know what I'm saying? Instead of trying to hold your trade and keep moving stop loss and all that, and to try to soak up the market, just let the market do what it's going to do. Be like, all right, well, I'm entering here. There's a 4 hour reason why I got into this trade, so I'm going to get out on the 4 hour reason. So be like, all right, enter here, get out here. Boom. And that'll be a sufficient trade. Now, this is a hypothetical trade. So, but I'm gonna go over like some price action from the week. I think it was the day of the election, if I'm correct. Brian, what day that was? You remember?
It was Tuesday.
It was Tuesday.
Yeah.
All right, all right, all right. So even from a 1 hour perspective, this is the 1 hour chart. We swept the high, I believe here, created a new high here, and we kind of just consolidated, played ping pong for the rest of the day. Now, this was some nice moves, but it really wasn't clean price action, in my opinion. Just my opinion. But so when we at or near all-time highs, this is kind of like the price action you're gonna get until the market decides to say, okay, let's retrace a little bit. So even that same 4 hour trade, you got the same setup on the 1 hour right here. So you got this gap right here on the 1 hour. You want to see how the market trades back into this 1 hour gap. For me, it'll be a 5 minute, a 5 or a 3 minute perspective. And then, same scenario with the 4 hour we just went over, just looking to see how it responds to this gap. Is it going to use it as support, or are we going to trade through it? Now, this is the if this happens, I'll do that. Or if this happens, I'll do this. This is that. This is how this is going to work with this. So let's just say the market decides to trade, the market decides to trade through this gap, right? And invert it. Now, my bias has changed. Now I'm looking for an entry to take the market lower. But if we use this gap as support, I'm looking for entry to take it back to these highs up here. See what I'm saying? So if this happens, if this gap is supported, then I'll do this to the upside. If it's disrespected, then I'll do this to the downside. So just looking at this gap should tell us a lot going into the week. Now, the market could decide to say, you know what, I'm not worrying about this gap. I'm just going to continue spooling price to the upside. I'm just going to continue creating higher highs, higher highs, higher highs. Boom. So now when the market does that, you have to eventually wait for a pullback back into a range, or for the market to create a new range. Now, you could trade the market to the upside. You could trade it without having data to the left. But in my honest opinion, that's not the best way to trade. It's going to be more so of you trying to scout to the upside more than have like a conviction of a trade to the upside, because unless you calculating moves and saying, well, the market gonna move 31 points on this day, so this what I'm getting out at. And if you know how to, if you do all that, if that's how you trade, then that's trade like that. But when you don't have the data to the left to rely on, then you kind of like playing Russian roulette because so when the moves, well, like when we don't have no price above us or to the left, like that's a big, like I was saying earlier, that's a big old pool of just liquidity. The market could go as high as it want to go. You know what I'm saying? So with that being said, hold up, give me a minute. With that being said, I am looking to see going into the week what happens here. That's going to tell me a lot about what I need to know. Now, it don't even have to come back down here. It could kind of consolidate up here and just play ping pong up here, and then boom, go with another move to the upside, or go to with a move to the downside. But with the information that I have right now in front of me, this is what I'm looking for right here. Like the market is closed, no candles are printing. This is all the information that I have. But this is what I'm looking for. Now, we did create a gap to the downside. With this, I think this was Friday or Thursday. And then we did close above it Friday, and we used that gap as support. So that could be a sign of some things to come. But with that being said, I just wanted to see what happens here going into the week with this gap. With this 1 hour gap, this 4 hour gap that's beneath us. Are we going to trade through it and kind of get a nice healthy pullback, or are we going to use it as support and use it for our next leg to the upside? But the signatures and price that you are looking for when we approach this gap is when we approach this gap, even the top of the gap to the halfway point of the gap, how is the market responding to it? Like what's happening on a smaller time frame? Like, does it, are we showing signs of reversal? Is the bottom of this candle, the top of the gap, this wick, is the bottom of this candle a low on a smaller time frame? Like, is this a 5-minute low or a 3-minute low? You know what I'm saying? So you start like planning your trade based on what you see here. So it's like, okay, well, if this candle is a 5-minute low, or let's say it's a session low, let's say it's a morning session low or something like that. And then, of course, you're looking for the market to sweep that. So essentially, you will be sweeping a low, trading to a gap, a pool of liquidity. So this will be a pool of liquidity, this low. This gap will be a pool of liquidity. So you'll be looking for a reversal. And then once you get your reversal, you know where you're getting out at, whether it be a 5-minute high, 1 hour high, 1 hour order block, 1 hour mitigation block, whatever it is, that's what you'll be looking to get out at. And then, you took your trade for the day or for the week, however you trade, and then you're out the way. But you had your bias, you had reasons. Okay. So let's just go down to the 5-minute and see. This was teaching purposes, and see that's a 5-minute low. Let's see if we find that gap. So what do we have here? No, it's not a low. It's a swing low right here. So it's not a session low though. But you got your, okay. With, That's probably, and this is probably halfway of the gap right here. Let's see. Let me just put the fib on this gap right quick, y'all. I'm not gonna be long. Damn, boy. Rocket sounds. You got these lows inside of this gap, right above the 50% of the gap. That's nice. So you would be looking for the market to kind of reverse and give you something like this. It should look something like this, right? So this is a good example right here. So let's just say we sell off, and this is the halfway point of the gap. This week we tap it and we reverse. Now, when we tapped it and we reverse, you got a gap right here, you got an order block right here. So we closed above both and used both as support. Let me show you. I'm gonna draw it out. This is your signs of reversal, right? You got a 5-minute gap, and then you got a closure above this order block. So now that order block now becomes support, and then you have your fair value gap right beneath it. And you see how we tapped into it and got out of there. That's what you will be looking for when I'm speaking on this 1 hour trade. That's what sign of reversal. Like, and I know these candles, let me go back to it. Because that's why we're gonna start doing this in real time. Because I know these candles, like when you see these candles printing in real time, you're like, oh man, I'm not getting in the way of that. But you got to also look to the left and see where it's going. You see what I'm saying? So you got to see, okay, what we got to the left. We have these lows, we had this swing low, then we had this order block down here. We didn't touch it, but we swept this low and we reversed, right? So if you want to dig a little deeper, we can. I'm gonna do that right quick too. So clearly from here, so from 1 o'clock to 4 o'clock a.m. You got your London. This your London kill zone right here. We consolidated for most of London, right? And then we just started dropping coming out of London. All right. So y'all always hear me say, like, when we consolidate coming out of London, I love to see that. But when we drop coming straight out of the kill zone like this, I, you gotta look, you always gotta look to the left from whatever time frame. So just the 5 minute, you gotta look to see where we could be going to, right? So the market looks for liquidity, either gaps or swing lows, swing highs, right? So you see all these lows down here. You see these lows, you got to say, okay, whatever low we decide to sweep and reverse, I'm betting that the markets are going to go higher. When you have your London kill zone now, and when you have an immediate drop or immediate move to the upside, you could always kind of in the back of your mind say, man, this is manipulation. When you have a an aggressive move in one direction, it's manipulation most times. Now, if the market is trading in one direction the whole day, like like it did Friday, just straight up, just then we have a trend day. But we don't have those type of days most days in the market. Most days the market is playing ping pong. Like we selling in the morning and we buying in the afternoon or whatever. So you can kind of like get the rhythm of what the market is doing. But when the market just has an expansion day, when it just goes in one direction, so most days when we have those days, I kind of like miss them because I'm always looking for the manipulation to happen first. So when I'm looking for the manipulation to happen first and the market just go without giving me a chance to get in the trade, then that sometimes that's just how a cookie crumble. But when you're able to understand what manipulation is and you start seeing it in the market, you just that enables you to be patient and wait for your trade to present itself. But I'm gonna say this: the London kill zone from 1 o'clock in the morning to 4 o'clock in the morning is very, very important. Even if you don't trade this or use it, I suggest you put it on your chart because what's gonna happen coming out of London is either we're gonna consolidate and the manipulation is gonna happen like right before the market opens, or the move is going to happen before the market opens. So these are the days that you need to study. Like for instance, this day, Friday, it's like okay, we got the kill zone, and then we just drop. So I'm assuming if I go to let's go back to the 1 hour. Matter of fact, yeah, let's go back to the 1 hour. Make these candles a little bigger. Mm-hmm. So this was your drop coming out of London, right? So you're looking for a 1 hour low to see what could we be going if your bias is bullish, right? So the market has been bullish all week. So you're looking for the market to continue to the upside or pull back on a Friday. But if the market is showing you that it wants to continue going higher, then you got to believe that. So this is not a swing low. It's a low, but it's not like a swing low, but it was swept. So once it's swept, you got to look for the market to see how the market responds to it, right? So we're looking at this from a 1 hour perspective as well as a 5 minute perspective. So on the 5 minute, it reversed, gave you the gap and the order block, and it continue higher, right? So if I'm trading this candle, let's say if I'm entering here, let's say here, let's say the gap happened right here in this area, and this candle is already this. So I'm under the impression that Well, this candle ain't even been printed yet. This is the candle I'm entering my trade in. So this is how I play this trade. Because I'm always looking left. So I'm not expecting to take this trade to a high, right? Because I don't know what the market is trying to do. But you got this order block inside that gap. Well, it wasn't a gap yet, but you got this. This is an order block right here. So I'll be looking to get out right there from a 1 hour perspective. Because sometimes the market is not going to always give you an opportunity from a higher time frame perspective to go to the external liquidity. So even though the market did continue to the upside, so entering my trade here and getting out here, that's a great trade. So it's not always about catching the big stupid moves. You could get your 25, 35 points in the market and just get out the way. So, but this is how you kind of like frame your trade from the 1 hour perspective. And then once you're framing from the 1 hour, you go down to your 5 minute and see if that trade. So let me put the line back up there. And you see how the trade correlates with the 5 minute. So let's go back to the 5. And this is going to be much easier when we start doing it in real time. So entering your trade down here, this is the order block. This is the 1 hour order block, this blue line up here. So in essence, you'll be entering your trade here in this gap and taking it to this gap, the top of this gap, because you don't know if they might use this gap to continue to the downside. So instead of getting caught in the traffic, you just find your price target and then get out the way. So you be like, all right, well, I'm just gonna take it to this high, the high of this candle, and get out the way because you don't know how the market's gonna respond to this gap. Right? Now, if you're patient and wait for the market to invert this gap, and then like, all right, well, if we invert this gap, then I'm going into the market. You do that too. There's always more than one way to skin a cat. So this is the early entry for the trade. This is the reversal down here, right? So then you're waiting for more information. So you'd be like, all right, even this gap, if we invert this gap, then you enter the trade. Okay, that's fine too. So if you enter this gap, where you taking your trade to? So these are the questions that you need to ask yourself in real time while you're taking your trade, right? So if I enter here, now this, you got to process this information, kind of fairly quickly because the market kind of moves at a different pace in the morning as opposed to the afternoon. So when you're processing your information and you see your gap, so you say, all right, we inverted this gap, we closed above it, we use it as support. Where can we be going? If you don't like the setup, all right, cool, because we got this gap, then we got this gap. So you be like, all right, you know what? If we invert this gap, then I'm interested in entering the market. So as well as inverting this gap, we close above that gap, this one right here. Then inside of that gap, you got your breaker. So this is also another sign of support. So now the gap is inverted. You can enter at the inversion or you can enter at the breaker. You took some heat on this one, but overall the market moved to the upside. But on days like this where the all-time high has already been taken, you gotta err in caution because the market is not gonna always give you the best exit strategy that you would like. Because not unless you want to sit in this trade until we come all the way back to London and take that out. And most of us not sitting in no trade for what 2 hours, 3 hours. No, we're not gonna do that. But this is why I be saying like when the market is trading around or at all-time highs, you gotta kind of finesse it and be cautious of what you're doing because you're not gonna have no data to look to on the left on the higher time frames, but you're gonna have something to look to on the left on the 5 minute, the 1 minute, stuff like that, because the market gonna, always kind of give a retracement on a smaller time frame or expansion on a smaller time frame. So you're gonna have like wiggle room to kind of like trade because you're gonna have data, but on a higher time frames, it's gonna be a little different because it's just, you know what I'm saying? You don't have that. So you would have to wait for the smaller time frames to kind of like gauge your trade, see how you want to trade it, see where you would take it, see why you went into that trade. And I'm gonna be honest with y'all. See this kind of price action right here. That's you don't want to trade this. And when we start doing the live market replay, and we have a day like this, I'm a trade this, and I'm gonna show you why you don't trade it in real time. Like you don't trade like you. And I know it's hard to kind of like decipher at first if the market is gonna be playing ping pong like this. It's hard to decipher at first because you used to the market moving a certain way, and then when it don't move a certain way, you kind of playing both sides of the market. Be like, all right, well, my getting long didn't work, so I'm gonna get short. Then when you get short, it don't work. Then you get long again, and then you get long again, and that don't work. Then you get short again, and then before you know it, you like, damn, what happened? So on days like today, on this day, you want to be cautious of what happened. And like I said, when we start doing the live replay next Sunday, and it's highly likely that we're gonna come across days like this because it's gonna be a random day that we pick each time. So you're gonna come across days like this, and you're gonna be like, you gonna understand why you shouldn't trade that. And you're gonna see why you shouldn't take those kind of trades or expose your capital to days like today when you're just playing ping pong, no true direction of where the market wants to go. But going into the week, man, let me go back to the 1 hour right quick. That's what I think. Going into the week, this I'm looking for a retracement down to this gap. And we might not get it. And that's okay. We might consolidate up here and kind of like grind to the upside or consolidate, just play a little ping pong up here to the next leg high. But, I would like to see a little pullback down to the 50% of this gap or even to this gap and just use that as a springboard to the upside. And if it does that, then I know how to trade it, where to get in. You know what I'm saying? Because now I got data. Because in order for the market to get into this gap, it got to trade down here. So it's going to leave me information. It's going to leave me data. So instead of trading up here or continuing to the upside where I don't have anything to look to the left. All right. And then last but not least, Tuesday, I'm gonna go over this price action from Tuesday. And then we could go to the hood. Like what Tuesday was, the 5th? Tuesday was yeah, this gotta be Tuesday right here. Is it? Look different. Hmm. Oh, this is Tuesday right here. Okay. So the reason why I want to go over this price action because this is like textbook. Um, like this is like beautiful price action. I'm gonna explain to you why. Um, so you have from 1 to 4, you got London Hills on, and when we consolidate coming out of London, like this is my favorite thing to see, consolidation coming out of London, because I know the first move out of that consolidation is going to be manipulation. So if I know the first move out of the consolidation is going to be manipulation, I would want that manipulation to be down to the downside because I'm expecting the market to be bullish. So if I'm expecting the market to be bullish, I'm expecting the first move out of consolidation to be bearish, which is why we call that manipulation. So you got this consolidation, you got this low right here, right? So this low, this swing low was I believe a 1 hour low as well. But yeah, it was a 1 hour low. But anyway, I was either looking for the market to sweep this low or sweep London's low, right? It didn't sweep London's low. So this is what the market did going into open. So now I'm gonna say this again. The market moves with time and price as a kind of like a cause and effect of what happened. So you got your consolidation coming out of the London kill zone. Boom. So your manipulation normally starts like right before market open. Right. So that's when the manipulation started right here about 8 o'clock. Market open at 8:30. Right. So you get an energetic move to the downside. Right. So you're like, okay, we should have some continuation to the downside. But if you able to recognize the time or what's happening in the overall bias of the market being bullish, you can be like, all right, cool, this is gonna be the manipulation. So once you get your manipulation, you're looking for signs of reversal, right? So here's a best sign of reversal that you can see. So you sweep the liquidity, all right? Once the liquidity is swept, you create a gap right here, all right? But you got a conundrum because the price leg that swept the liquidity, this 5-minute price leg that swept liquidity, also has a gap on it. Now pay attention to this. This is the secret sauce right here. See, when the price leg of the the liquidity sweeping price leg has a gap on it, you want to pay attention to that gap. You want to wait for the market to invert that gap. That's when the market is ready to be reversed or reversed. The market inverts that gap, it's highly likely that it won't return to the gap that it created off the reversal. So when you see this, the leg that sweeps liquidity creates a gap, you want the market to invert that gap. We inverted that gap with this candle right here. Now, seeing this in real time, it looks different. It feels different. But in real time, I'm like, okay, well, we got this guy right here. I want us to invert it. And we did with this candle. Very next candle, this green candle, very next candle. We test it and we go. Going into open. Like I know a lot of people don't like to trade the open, but this setup was immaculate. Right? Because we kind of felt like we already had talked about the market being bullish anyway going into the election. You know, outside of that candle from last week, that kind of spooked me a little bit. But we already talked about the market being bullish going into the election. So if my bias is already bullish, I'm looking for a bullish setup. Found it right here. Boom. So say this. The 3 things that I look for in a reversal trade is when the liquidity is swept, I'm looking for a gap to be created off that liquidity. I'm looking for an order block to be created, or I'm looking for an inversion. And we got the gap to be created, and we got an inversion. Now you're not gonna always get all 3. You not 9 times out of 10, you just want one. You just want one to kind of like give you your bias. So we closed above the gap, inverted it, used it as support, and we got out of there. So that was a trade that I took on Tuesday. And from here to this high, which was also a 1-hour high. So that was a pretty clean setup and a pretty clean trade, and it got there very quickly, So those are the trades that you like to take. When you see it, take it every time. So when you see, that's why I'll be urging y'all, I'll tell y'all like to put the sessions on your chart, because when you have the sessions on your chart, you can see how price action is moving outside of the session. Like even this session, you be like, all right, this consolidation outside of the session. You always want to see consolidation coming out of London. And then going into the open of the market, you want to see an energetic move in the opposite direction of what your bias is. So if you were bearish, you would want the market to consolidate and have an energetic move going to the upside before market open, or right when the market is opening, and you're looking for it to sweep a pool of liquidity or a trade to a pool of liquidity in reverse. and then look for your entry to the downside to take it to the lows. But that's all you know, are pretty much looking for as far as reversals, trading reversals. And I know everybody in here, y'all don't trade reversals. Y'all have other setups and means of trading, how you trade. But to me, the cleanest setups happen between 6 and 10 in the morning. And when you have a nice consolidation coming out of London and you're able to sweep a low in reverse and get out of there. And you had your inversion here. It was clean, traded back into it a little bit and got up out of there. So now I'm gonna just go a little further on this trade, and then after that we could go to the hood. So when I take a trade like this, my stop loss, because we got to talk about safety. So when I take a trade like this, the candle that inverts the gap, I usually put my stop loss below the low of that candle. Right? So this candle inverted the gap. I put my stop loss here. It's a tight stop loss. I'm not putting my stop loss below this low. I'm not trying to lose that much. Jesus, but right here, because even if this stops me out early, and it don't change my bias. It gives me more bullets to shoot. Like, you know what I'm saying? Instead of entering the trade here and put my stop loss way down here, and then I only could take one trade because it stopped me out, and and that was a large amount of money to lose. You know what I'm saying? So when you see a reversal, when you find the inversion fair value gap, when we close above it, the candle that closes above the gap, like that low of that candle, I put my stop loss there and just let the market go. And if you get stopped out here, if you get stopped out, it's a small loss. But if your bias, if it don't change, if it just come get you out and continue to the upside, or and you find another way to get in the trade, you still got that's another opportunity for you to trade instead of taking one trade and taking all your risk management off on one trade, if that makes sense. And everybody in here that trades a Nasdaq, we do know that the Nasdaq does move fast, and but in real time, when you see this trade set up, that's the secret sauce. That's like the bread and butter of the market. The market is always reversing and continuing. So you either trade a reversal, the beginning of the reversal, you could trade a continuation. In the middle of the range, you'll either leave you a gap or order block, like so. That's a continuation entry. You take that continuation, you enter an order block, you put your stop loss below the lower the order block, and you keep continuing to the upside. It's all in how you want to trade. It's all in how you want to trade. But I wanted to go over that price action from Tuesday because that was some really, 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 really clean price action. It was nice. A quick trade, like a 7-minute trade or so, I guess. But that's like this is like the secret sauce of being able to spot your trades and spot reversals. So even if like on the 1 hour, that 1 hour trade that we was talking about earlier in this gap, this is the setup that you're looking for inside of that gap. You're looking for some type of sign of reversal inside of that gap. This is what you're looking for. So now your bias is going to switch from bearish to bullish, right? Because we got to sell down to get into that 1 hour gap. And then once you get into that 1 hour gap, you go down to your 5-minute or your 3-minute or your 10-minute, whatever you trade, and you look for signs of reversal. And once you start seeing the signs of reversal, you look for entry. So 1 hour gap, boom, you're looking for signs of reversal at about the 50% mark on a 5-minute chart, 3-minute chart, 1-minute chart, whatever your chart is, you look for that. And then once you're able to recognize the signs of reversal, so the signs of reversal always going to be a liquidity pool getting swept, a reversal, meaning the closure above the league that swept liquidity on a smaller time frame, or the gap on that league that swept liquidity. So you got this 1, 2, 3, 4, 5 red candles in a row. You got the gap, swept the low, close above that gap. Now it's time to go to the upside. The market is telling you what it wants to do. Because if the market wanted to continue to the downside, we would have traded into this gap and kept going. We would have wicked into this gap and kept going to the downside. But we closed above it and then moved to the upside. So those are like the breadcrumbs that you see. And like when you trade in live and the market is moving at a fast pace, especially in the morning for the morning sessions on the NASDAQ, these are the things that you should draw your eyes to. This is what you want to see in the market. Like you don't want to you want to see consolidation, energetic move in the opposite direction of your bias. So if you're bullish, you want to see an opposite move. You want to see a bearish move. It don't have to be a big move. It don't have to be like a big drop. It could be something like this outside of the consolidation. And see, oh, you say, oh man, we got this low right here, and we got London low right here. So you trying to look for a reversal in this area of these lows. Now the market wants to just continue to the downside, then it continues to the downside. You look for a trade to the downside. But once you see from 1 to 4 a.m., once we consolidate coming out of London, and you know the New York session opens at 8:30. So if you see a energetic move anytime before 8:30, you looking at that as manipulation. Always keep it in the back of your mind. That's going to be some type of manipulation. And then it's your job as a trader to find where that manipulation could be going. Where's the swing low? Is there a gap beneath us? Is there a low beneath us? Is it London's low? Is it the previous days or afternoon sessions low? Like that's what you got to figure out as a trader and how you're gonna gauge that trade and take that trade if you're interested in taking that trade. But that's why I always draw my sessions out on the chart because it, it lets me know what's inside of the session and it lets me know the high and low of the session. You know what I'm saying? So even inside this session, I got the high of the session, I got the low of the session, and I see what's inside of it. I see this gap that's inside of it. You see what I'm saying? So I see this order block that's inside of it. So you get to see, it's almost like you breaking the market down into sections and you seeing what happened in each section overall, and outside of just looking at it from a high time frame perspective. But I'm gonna end it like this. Going into the week, same thing, looking for a retracement into this gap. It don't have to. I would like it to, because if it does, I'm assuming it's going to use this gap as a springboard for the next leg to the upside. If it doesn't and it closes beneath this gap, I'm looking for prices to continue to the downside. So I'd be looking for a bearish setup instead of a bullish setup. So any questions, comments, or concerns going into the week? Nope. All right, cool. We go to the hood. We do the most good. Uncle Willis on. Uncle Willis on me? When you ready?
Yes. Oh yeah.
All right. Mhm.
Haven't seen the chart? Yeah, nine. No. Yeah. Yep. This Tesla.
Hey fellas, I gotta run, bro. I'm gonna catch y'all next week.
All right.
All right.
Uh, I highly doubt Tesla broke this 100 mark, which was also a level over here, a swing high. Um, I don't think we're gonna go back to touch this candle. Look like we're gonna leave a gap. Uh, so my entry for Tesla will probably be 300. You're trying to get it to go to be a long, drawn out thing, like 360 and then 400. But you're gonna need time with it, a lot of time. I want to see, probably find out like when the next earnings is. You're trying to get it to get up there before that earnings date. So I like a 300 entry on Tesla to 360. Buy, uh, what this is, between 585 and 583, getting a 610 call. 585, 583 to 585, 610 call.
583 to 610 call for what?
Five,
Next week?
no. Don't do that. So look, I'm sorry. That's the long shot. Really 585 and play it back to 600 is a safer call, but
Okay.
I don't see it turning around until we get to this next part on the fibs, 100% mark. So we broke 78 right here, which was 100 on another fib that I drew. Like some of these numbers are just lining up. So it broke it, come back, test this stop sign, and then go up and hit your next target 609. But you're getting a 600, which is this high. Hopefully, we could get a sell off at the beginning, like Mike was saying. The 1 hour gap on the NASDAQ, whatever, you got to sell off to get there. So you get a little cool off point. I will be looking to get long at anywhere between 83 and 85 because that's the level that we broke. So let's see, 85 get a 600, but I'm not afraid to hold that until it get to 610. You'll just be $10 in the money. And I'm thinking 2 to 3 weeks, y'all look at the price on it when it get down there. You can't look at it now because it's gonna be higher. You're waiting on an entry, then you decide which one you want to buy. So I know Maul, he good at alerting us when numbers hit. Anybody watching Spy, we get down to 585 or close to it, put y'all alerts on to get into a long call anywhere from 600 to 610. That's Spy. Then QQQ.
Hey,
QQ,
when I got a question for you real quick. I don't mean to cut you off.
sir.
That August 620 I was telling you about that I grabbed back in September. I closed it too damn early. But would
Did you
you
close it in profit?
yeah, I did.
Okay. So it wasn't too early.
Um would you still consider like okay if we go back down to 585, I'm assuming that that contract maybe between 7 and 900. Would you take that going into August of next year?
620?
Yeah.
I mean, you could. I mean, to August of next year?
Yes.
Yeah, you gonna get it when it hit 585?
Yeah. Go
I
back
don't see why
into
not. Because you enter in the season to where January we run, March is like a sideways thing. We're not gonna start selling until no, March you sell off, so you get a run at the beginning of the year. You get what I'm saying?
yeah, I'm looking at it now.
Always,
It's actually it's a 620. Spy 650 for August of next year.
I don't know.
Go ahead. I'll just
I don't see it slowing down. I'm gonna say this. Uh, nah, I can't call that one.
okay.
I got 610 up here.
Yeah.
And if you get it, I mean, we looking to get an instant reaction off the um 85. So you
Yeah.
might be in the in green. You get what I'm saying?
Yeah, I got you.
With time. So I don't know if you need to go that far out, 650, but it could possibly go there. And the chart, Mike always preaches internal and external. A lot of this stuff is actually moving pretty cool. It's checking off a lot of numbers. You got your consolidation to where it could run a 620 and then come back to 585 is now our new entry. You get what I'm saying? Because it
Yeah.
consolidated right here. So this is the new level that we got to close below for us to even start looking at downside numbers.
Okay,
So
cool.
even if it goes to 620, come back down. I don't look for it to go lower than 585. And then it goes on another run again, and probably an even stronger run after then did that little correction. So possible.
Gotcha. Appreciate it.
All right, QQQ. QQQ is a little different. It it hit us 100% mark. It didn't break it. So I was looking for closure above um what's this 514.22. It's like right on that line. It could be a break, it could not. If you were gonna take upside on this one, you still could get in at 500 or 498, but I'm gonna say 500. Uh, I don't know if this is a cap. This could kind of cool down. Y'all was paying attention to Tesla and Nvidia really had it moving. I'm gonna show y'all like so everything else that's in there is that Apple, Apple didn't break out. Uh, Microsoft, they didn't break out neither. It was really Tesla and Nvidia that made Tesla, Nvidia, and probably a few other stocks that made the Nasdaq run. But the two biggest companies, they didn't have nothing to do with it. So if they decide to run, then we'll break through that 514. I did like this Nvidia play. So I like SPY, and I like Nvidia for like some short term plays. So Nvidia, it didn't hit us 100% on the fibs. So I'll be looking to get in 143 to 157 to try to clear this pocket of the extension. So 143 entry to 157. If you like round numbers, it'll be like a 145 to a 155. And that's NVIDIA. I'm looking for it to go hit this 100% mark. Closed above the all-time high. Checked off on 61. Broke out. So 143 to 157 is the number. But you can do like a 145 entry to 155. Y'all got that? Everybody got that. Y'all got it?
Yeah.
Now,
What's up, brother?
you got the play?
I was jotting it down. SPY 585 entry, 16 code, QQQ 145 entry, 155 code, right?
I think you told. Was that what I said?
Oh my goodness.
No, what you one? Hold on, bro.
Wait, what you said?
No, no, no,
QQQ?
no. That was Nvidia.
Oh, no, all right, no video. All right.
Nvidia.
Well, what you said?
Funny.
QQQ?
Nothing. I like Spy and I like Nvidia.
No video. All right, I was like,
Nvidia is 145. Get a 155.
okay. What else?
You got Spy.
That's fine.
585. Get a 600 to 610 call. Whatever. But
What's the time on that?
2 weeks or better
Okay. Okay.
from when it hits. From your entry, not by Monday, from when you get in, try to get 14 days on the contract.
Okay.
14 and above. And put your alerts on it. Like I said, that way, if we see something different, we could all be knowing the price, the premium for the contracts and stuff. You could get us in a exact date. Y'all just pay attention to when those numbers come up. And that's the ones I got, bro. For now. Y'all got something else y'all want to look at? Y'all good.
We good.
Hey,
All right.
Wayne, real quick. Just take a look at a couple of Bitcoin stocks, maybe like Meister, Riot,
Yeah, I forgot. Yeah, Ryan, Maryland. Yeah.
or maybe not Meister. I know Meister contracts be high for a lot of people, but Coin, Myra, Riot, any of those?
I ain't that fucking trash. I cheated a little bit while Mike was on. But
At
Ryan
least
might be the one where you could get like a good contract if you think it's gonna go to 18. I don't know what the price is. It broke this little level where it sold off from. They could try to go take out this high at $18. I don't know if it's worth it. I didn't look at the contracts. Again, that'll be you if you feel like the premium's good on 'em. But
got
$20 the next month, like this shit sold all way from down there. Maybe a $20 call.
that's Myra.
That's Riot.
Okay,
Myra. See, it's not really moving. That don't mean it'll like spike up. It won't spike up, but
might not stay.
yeah, they've been kind of flat. They had like major sell-offs. This shit fell.
Yeah, I've been doing that all year.
Yeah, so
Damn near.
your next number on that one is like 27. See if it's gonna take out that, but I don't like them.
All right.
Who did Myra? MSTR might be the only one. But again, like you said, these contracts are high. I went to this number I have right here, 313. Because if you go back, back yeah, go ahead, 279. 290 was the last open, but your last set of buyers was at like 318. I mean sellers, I'm sorry. Was at 318 where they pushed it down and it fell from there. Opened at 290. The high for that candle was 318 and it sold out. That might be where it's going back. It might end up taking out the high though. I can see it coming up here and sweeping it. But You won't go with the high. The safer one is to even come test 318 or call it 315. You go with the round number. Then what's this? 258 or 260 would be the entry for that. So maybe you do a 260 and then probably get like a 300 on MSTR. But I haven't looked at those contracts either. So if the price is feasible,
Take a look. Bitcoin hit an all-time high this morning. So see if it
it
continues to
might be
trend up.
higher than that then, huh?
Yeah.
Tomorrow's probably gonna be higher. A little gap here. Well, see, it already checked off on this. Started pushing up. Now, let's keep it on the radar. We'll look at it. Probably wanted to take out this high first before you actually get in. Because it closed inside this green candle. It didn't go higher or lower. So it's like an indirection candle. It could end up being a reversal candle, or it could break out and then run. So I kind of wait on this one until you get it to close above or below this candle right here. Looked at the other ones, huh? The one Amazon stock. This one daily.
What that is?
This Amazon,
Amazon. Oh,
but it can't break the 210 level. So you get a closure below inside this gap. It'll be 207. I don't know. I had to look at some of these contracts. I had to look at and see if it's even worth it. There's like a $7 gap, but depending on the price of the contract, it might not be worth trying to play those $7 to get this gap filled. So don't worry about that. There was another one I looked at. Yeah, don't scratch that. Don't worry about Amazon. So really, a spy and that video is the ones that we need to pay attention to. They got room to run, to sit in them, get some good money. All good?
yeah.
All right. Rise up, brother.
Sure.
Rise.
Gotta go. I'll let y'all in the chat.
All
All
right.
right, brother.